President Xi on the charm offensive. Biden and Xi share a phone call. Alibaba continues to sell its stake down in Bilibili. And Xiaomi debuts its SU7 and the demand is hot. All that and more on China's stock market. This is your weekly wrap. We missed last week. My apologies. It was Easter. Happy Easter to those who celebrate it. But it's actually been a very mixed week, or a very up and down a couple of weeks for markets. You had the public holidays in the West, and now you have the public holidays in the East, particularly on the mainland. So it's Friday, 5th of April. Mainland was closed yesterday and today. Yesterday, Hong Kong was open. So we're going to wrap up the last 2 weeks. As always, going to give you my opinion, my insights, and you can make a decision from there to make an informed decision on China's stock markets. If it's the first time you've tuned in, we just recap and review everything that's happening, or most things that's happening in China's financial markets, particularly its stock markets. It's underreported. It's not given enough analysis for the second largest economy in the world, and what I still believe is the most important economy in the world and will be the most dominant economy in the world going forward. We wrap it up all here. We always begin with a disclaimer. Just remember, these opinions are my own. It's not financial advice. It doesn't propose for you to buy or sell a security. Be careful. It's risky. It can be volatile, particularly in China. And while I try to keep everything up to date and as factual as possible, sometimes I cannot. Without further ado, let's get into this week's agenda. We're going to do quick hits. So just some quick news items that's happened on the mainland or in Hong Kong. We're going to have a look at the market performance in a disrupted week. We're going to talk about Baba and Bilibili, cattle and Tesla, Xi's charm offensive, meeting dignitaries around the world, but mainly US CEOs. Xi and Biden sharing a phone call. First time they've spoken since San Francisco. Horizon Robotics proposed IPO. Xiaomi debuts the SU7, and I've got some thoughts on that. And Baba's share buyback continues to be upped. So a lot happening. So let's get cracking. Let's have a look at quick hits. So Janet Yellen visiting China. She's going to be there this weekend. She talked about during the week the overcapacity of Chinese industries, particularly around green energy or renewable energy. She said that she would be bringing it up with leaders from China. So what are they pissed off about now? They're pissed off about that, China years ago started to invest heavily in renewables. And as such, they developed, really great solar industry, ion battery industry, EV industry, et al. And because of that, this is a feature of the Chinese economy. They dump so much money into a new industry or new sector, they produce overcapacity. And what that means is they got so many units, let's say ion batteries, that they don't need or can't meet in terms of domestic demand. So what that means is they can then flood the market with cheaper prices and outprice domestic producers from around the world. And that's what the Americans are concerned about. That is an unfair trade practice. I will admit it is an unfair trade practice. But it's something that the Americans are concerned about, particularly around EVs, particularly around ion batteries, and particularly around solar power, where the Chinese are market leaders and are actually, heads and shoulders above their competitors. So she's visiting China this weekend. We'll talk about Bai and Xi's call and what that sets in terms of the year. I think it's actually a good thing in terms of Chinese equities. China Passenger Car Association reported retail sales of passenger new energy vehicles, which include hybrids and fully electric vehicles, increased by 28% year over year and 80% month over month to 698,000 units, which brings year-to-date sales at 1.758. We're certainly seeing I know those numbers look good. A little bit of a decrease because the sales have been so good in the previous years. I remember that China's EV sales around 30%. But I did talk about a survey 2 weeks ago where they surveyed Chinese EV owners and asked them whether they'd buy another EV and the uptake rate was quite low. And I think that's got to do with charging stations and the ability to charge. China changed some policies around payment loans on new car purchases. So normally you would have to have 20% deposit, in some instances 15% deposit. If it was a personal vehicle purchase, you don't have to have any deposit right now. So they've changed those lows, zero down payments, and I think that's to increase car sales. They really want to rejuvenate their car market. Not what I mean by rejuvenate, it's not like it's not a bustling car market. They want to get old cars off the road, and they want to get as many EVs as they can on the road, and this is designed to do that. It's also designed to boost consumption and therefore demand and therefore the economy. So who does this really benefit? I mean, it does benefit car makers, but the banks. I think the banks will do really well out of this because they're the ones that have got to give the loans. And there's going to be more loans if you don't have to put any money down. So I thought that was an interesting move. 10-cent payment approval, that's actually from 2 weeks ago. My apologies, there's an error there. And then PMI numbers, which is the Purchasing Manufacturing Index, a real good indicator of Chinese growth or Chinese economic strength within the mainland. That was expansionary. It came out, I think, at 51 point something, or was it low 50s? Expansionary nonetheless. The greatest acceleration we've seen in the last 13 months, and the first positive expansion in 6 months. That's on the back of strong export numbers and strong retail sales numbers, which indicate, not a confirmation, we need to see some stability and some continuity here. I'm looking for another word there. What is it? Consistency in these numbers. But it does show that policy is working. And I always say the consumption numbers need to come back. And therefore, I think we back off to the races in terms of economic growth. Well, consistent, stabilized economic growth. China doesn't want to grow at 9% anymore. Doesn't want to do that. And then Baidu and Apple. So there was a rumor about 9 days ago that Apple was going to use Baidu's ErnieBot as their AI application on the new iPhone. This is off the back of Samsung using, that's confirmed, ErnieBot off the back of their new smartphones coming out of China. This is big for Baidu. Massive. If they can get Samsung and they can get Apple, something tells me they're going to get Xiaomi, they're going to get Huawei, which is a massive, massive, massive intake of data for ErnieBot, which really puts them into the pocket or the driver's seat to be the market leader in the version of ChatGPT. And I've always said, I think in China, it's going to be a winner takes all, kind of like what's happening in America. I mean, does anyone use the Google version of ChatGPT? I don't. I certainly use ChatGPT. So there are quick hits. Kind of covered 2 weeks in one. A lot of those last ones from the week before. But there are quick hits in China. Now let's take a look at the market performance. Again, disrupted week. So no Friday, no Thursday on the mainland, no Thursday on Hang Seng. It is Friday morning, 7:37 a.m. here in Australia. So I kind of go from Thursday to Friday. So Friday last week to Thursday, cover 7 days. This will take Thursday to Friday. We'll actually cover the last 5 trading days. 1.4 for the SSC composite. Shenzhen 1.14. Hang Seng 1.18. I will take you to the 3-month numbers. A quarterly gain for all major markets within China. 3.5 for SSC. Shenzhen 2.44. And the Hang Seng 0.31. You know, really bumpy start to the quarter, or a really bad start to the quarter, but a really good finish for Chinese equities off the back of policy support, renewed optimism, good numbers, the national team, etc. But it's finished off the quarter with a gain, and it hasn't seen that in quite a long time. In fact, some mainland markets are entering bull territory, which is 20% off the most recent low. And that is courtesy of TradingView. All right, let's get stuck into it. Some of the big news items out of the mainland over the last couple of weeks. First one was Alibaba continues to sell its ownership or divest from Bilibili. So it released, I guess, a news item. The exchange released a news item. Alibaba has sold approximately $360 million worth of Bilibili stock. This is all inclusive. And it's depository receipt. So Bilibili is listed in the US under an ADR. This led to, on the day of the announcement, a massive drop in Bilibili. It's been under a lot of pressure. We did cover Bilibili's earnings a couple of weeks ago. Not amazing, not great, not awful. Struggling for growth in what is a saturated market, particularly in that video content market. But Alibaba continues to divest from non-core sectors. For example, they've divested from Xpeng, SenseTime, GoGo, and we've seen them invest in AI startups like, what was the one? I'll remember in a moment. And I've covered that. This is a real sign that Chinese tech companies are looking to innovate and grow. Why are they divesting? They say it's to concentrate on core assets. To some extent, I agree, but this is also the lag-on effects of the regulation that we saw in 21, 22, and Alibaba really coming under a lot of pressure. They've been forced to divest some of these assets. Like Tencent was forced to divest some of its gaming assets, I'm going to say forced because no one said they were forced. Meituan, it's all part of a greater strategy. It's not just, we don't want you to own everything. To some extent, that is correct, but it's also part to grow innovation. There is a theory amongst Chinese regulators and, the Politburo or the Chinese ruling National Party that if you have mega tech companies that have their fingers in every single other tech company, you don't breed innovation. And there's something to be said about that. Previous to 21, Alibaba and Tencent had their fingers in pretty much every major tech company. Pinduoduo, JD.com, Meituan, Bilibili, Youku, all of them, right? So this is part of that divestment. They're also focusing on their core assets. E-commerce, Tmall, always get them wrong. Tmall and Taobao, Lazada, Cloud, LME in terms of their food delivery, where they've lost some ground to Meituan. Bilibili was once a key partner, but it's really struggling in terms of its profitability in mobile gaming and online commerce, despite long-term collaboration with Alibaba. We did see Alibaba's stock decrease over the last year, but we see co-founder Jack Ma has maintained his stake. I really like where Alibaba is situated. I don't think we're going to see double-digit growth for a long time, but I just really like the refocus on the 6 kind of key businesses that we talk about within Alibaba. I like the investments in AI that they've made. And I just think I like the buyback, which we're going to talk about. I just like where this is positioned. I still think this is a flagship company. It's had a couple of years of, real tumultuous times. It's had everything but the kitchen sink thrown at it. But I think there are fundamentally great businesses within this mother company that I think are positioned to do very well with the renewed emphasis on innovation, technology, and I think the bounce back in the Chinese economy. And remember, it's lost a lot of room and a lot of business to rivals like PDD and ByteDance in particular areas of their businesses. So it continued to sell its Baba. Cattle. So I think Cattle is the greatest Chinese company you cannot buy. You can't buy Cattle, right? It's listed on the mainland unless you have special dispensation through your broker to do so. Now you can do it, and I'm probably going to do a video on how to do it. Very difficult, but it can be done. But man, what a company this is. And they just continue to do amazing things. So what have they done here? Well, they're partnering with Tesla. No other than Tesla to provide them with machinery to build their batteries in their Nevada factory, right? So they're going to use idle cattle equipment, which is what the announcement said, which goes back to Janet Yellen's issue with overcapacity. They've got all these machines which, they don't have enough demand for, even though they're the largest battery maker in the world and doing phenomenal things, this company, to help them expand their battery production in Nevada. Now, the CEO of Cattle talked about, do we go and build factories to build batteries around the world, to position them to export, or do we do it in JVs? And he preferred to do it in joint ventures because it was cheaper and easier. Now, Cattle already provides most of the batteries for the Model X, or is it the Model Y? One of them for Tesla. So they've already done, they've been working together for quite a long time. This is developing the M3P battery for Tesla, right? Which is an innovation or a movement away from the LFP batteries because they offer higher energy density and are cheaper than Tyranny batteries. And they're targeting the EV market with over 700 kilometers of range, right? So it's more advanced battery. Now, Cattle did say on a 2022 roadshow that they would have these done by 2023 and out for service. I don't think they've done that yet, but they're obviously working on it. On August 16, 2023, Cattle unveiled at a Shenzhen Superfast Charging Battery show an LFP battery that charged in 15 minutes, had a full charge in 15 minutes, or had a 10-minute charge that gave you a 400 kilometer range. So this is all about producing batteries that take less time to charge and give you a higher range. They are coming. They are coming, and they are Chinese. They are coming, and they are Chinese. And in all likeliness, they are Cattle. If they were allowed to just do what they wanted to do, I think most of the world's EVs would be using Cattle. And a lot of the world's leading automakers are working with Cattle on their batteries. So this is a big move on the back of enormous earnings report, great export numbers, blew past, EPS. I mean, what's not to say about this company? This is a national champion. When we talk about Chinese tech national champions, and when we talk about national champions in general, then you talk about, maybe Tencent, national champion. Alibaba, was a national champion, kind of fell out of favor. Some of the oil companies within China, CNOOC, national champion. SMIC, in my opinion, national champion. Cattle, I think it's probably number one now. This is probably the best or the greatest Chinese company. And it just continues to do amazing things. Very well run, very advanced. And I continue to talk about EVs or ion batteries or lithium batteries. China is the single biggest choke point for ion batteries in the world. You can't make good ion batteries without going through China in some way. Continue to do really good. Remember, they've been in partnership with Tesla for a while. This just expands that partnership. And the thing is, rather than building factories overseas, they're taking the approach of JVs will provide you with the technology and the equipment. All right, so Xi went on a charm offensive. And this happened around 10 days ago. So there was a conference in China, kind of like a getting back to business expo. CEOs from all over the world flew in. And then they had a kind of, intimate, round table. I don't know how it was, breakfast, lunch, dinner with actually President Xi. Okay. So earlier that day, President Xi met with Dutch Prime Minister Mark Rutte. And the reason why I include that is because he was probably talking about ASML and lithography machines and China trying to produce their own semiconductors and, kind of getting out of the US bans upon that. Now remember, ASML is a Dutch company. They are banned, or they banned lithography machines being sold to the Chinese because of the American small yard high fence policy around that. So I thought that was really interesting. And then President Xi met with Qualcomm's Cristiano Amon, Broadcom's Hock Tan, Blackstone's Steven Schwartzman, Chubb Insurer's Evan Greenberg, FedEx Raj Subramanian, National Committee on U.S. Relations Stephen Orland's president, U.S.-China Business Council Craig Allen, Asia Society John Thornton, and Jack Kuzi from the China Stock Market Show on YouTube and on podcasts. Just kidding. It's just, apparently, from what I read, there were like questions asked directly to President Xi. He answered them. Big move. The fact that they hung around, we're open for business. We want to grow. We want to open our markets. To some extent, they're not going to fully open. Let's not expect them to fully open. Let's just, call a spade here. They're not going to fully open their markets. But I thought it was a big, nice little move. Now, why did he want to meet with them? Well, one, he wanted to reassure US companies. He wanted to reassure them that, okay, I know the economy is slowing down, but we're doing everything we can. And he wanted to say, our economy has not peaked. We will continue to grow. And we're improving our business environment so that you can come in and sell your goods and services without us getting in the way. He wanted to continue or encourage continued investment in China. Remember, FDIs are at 40-year lows, foreign direct investments. He wants to persuade US corporations to work with Chinese companies long term. He wants to engage in them. He wants to talk about geopolitical and economic tensions and say, look, we might have our differences. However, we're two great countries. We need to work together. Kind of what was said between Xi and Biden in the call, which we'll cover in a moment. He advocated for cooperation over differences, emphasized the importance of overcoming differences and increasing interactions between the two countries. Just a lot of fluffy, good stuff. Who knows what was actually said in there? I'm sure it was nothing crazy, but I think it was saying, hey, we're open for business. We want you to do business here. We're prepared to do business. We're prepared to, break a few things, or not break a few things, but, create an environment where you can benefit, foster communication, foster that. The representations indicated a wide range of industries across the US. And the CEOs wanted to be there because it's a massive market for them. So I thought that was really good coming out of China in the PR, the public relations. Okay, this is a public relations thing, and it shows you that President Xi is really focused on getting the economy back. And you would argue that last year that focus wasn't as great as he was focused on other issues, particularly domestically within China. So we saw that out of China. I think that was a real indication that they're back to business. There was a quote there from President Xi. In the past, it did not collapse. He's talking about the economy and how that, it will grow again. And he's referring to, you hear this talk, China, you've heard this for decades, China's going to collapse, can't sustain. In the past, it did not collapse because of talk that it would collapse, and now it would not peak out just because of talk that it has peaked. Xi Jinping, according to a readout from CCTV, which is the Chinese national broadcaster. All right, I thought this was interesting. So Horizon Robotics has filed for an IPO on the Hong Kong Stock Exchange. If you don't know who Horizon Robotics is, they're actually founded by ex-Baidu Incorporated Deputy Research Chief Yu Kai. It focuses on assisted and advanced intelligent driving solutions. It was valued at $8.9 billion in its last fundraising round in November 2022. The IPO is sponsored by Goldman Sachs, Morgan Stanley, and China Securities. They have SAIC, Motor Corp, Volkswagen, Hillhouse, Five Way Capital, and Sequoia as its major investors. It competes with firms like Mobileye, Renesas, and Texas Instruments. Its market share in China has gone from 1.1% in 2021 to 9.3%, and its products like active safety, highway, and assisted intelligent driving. So it's done really, really well. It's in over 200 car models in China. So it uses Horizon's active safety solution, Horizon's Matrix Mono, and more than 25 models use its highway assisted solution, Horizon Matrix Pulse. So it's a autonomous driving, I guess, add-on to cars. Despite its growing revenues from 470 million yuan in 2021 to 1.5 billion yuan in 2023, it's still operating at a net loss of 1.64 billion. But I thought this is interesting. Very innovative company. It collaborates, interestingly enough, with TSMC for its chip production because it's a really advanced chip. Let's see what happens in that in the future. But the point I bring in is there's some IPOs, some really technological innovative IPOs coming to the market. We're growing together. This is one to watch. When it does come out, I might do a full breakdown on the prospectus and see what it's like. All right, Xiaomi pops. So Xiaomi popped a couple of days ago on a report by the company that it had received 90,000 unit orders of its Xioimi SU7 sedan in the first 20 hours. The stock was up 16% on the open, kind of finished about 8% up. This is on the back of a couple of weeks ago when it announced that it was going to sell the SU7, where it had a massive pop, but there has been amazing orders for this, right? Now, not everybody that put an order in is going to buy it. In fact, Goldman Sachs is predicting around 100,000 orders could be delivered by the end of the year. Why? It's priced really, really well, okay? So it's priced at the 214,000 yuan to 300,000 mark. So it's cheaper than the Tesla Model 3 and kind of in line with the BYD more expensive models. Xiaomi's got a great brand name. The car looks fantastic, and they've done really, really well. Now you can see the stock price jumping. You can see that massive move there if you're watching on YouTube, just before that massive pop again. There's more at play here. Now, why would Xiaomi get into EVs, right? This is what Apple got out of. They couldn't do it. 3 years ago, they announced they were going to get into it, and they've done it. And they're selling a car now. So they'll be selling this in like 26 cities over the next couple of weeks, or, opening for sale. Well, there's a couple of synergies that they have. Remember, Xiaomi is the third largest smartphone maker in the world. So in essence, because of that, they are the sixth largest purchaser of chips in the world. So they got firstly, they've got supply chain logistics know-how. Designing a phone, assembling a phone, putting it together and exporting a phone, similar to designing a car, assembling a car, and exporting a car, or sending out and producing it. I know they're different products and they're much larger than the other one, but it's a similar type of process. Design, complex production, sell it out. So they've got some supply chain logistics know-how that they can benefit from. Secondly, what's the problem with all these cars? There's a chip shortage. They've got some pricing power, or the supply power. They can, force some of their suppliers to give them their chips or get them at a better price, I think is two. Thirdly, and most importantly, it's an extension of your home and your office. So what do I mean by that? In the future, when the autonomous vehicle is here, you'll be sitting in your car and it'll be an extension of your office and your home. In your car, you will send emails. You will book holidays. You will turn on your oven and preheat it to 180 degrees so that when you get home, it's preheated and you can put your dinner in there, right? You will be in your car and you will send emails or turn on your laptop at your office to get you ready, or your lighting or your aircon, so that when you get into your office, everything's connected. Okay? Now let's take a look at what Xiaomi does. It sells smart home appliances, wearable devices, and computers. It sells smartphones. The smartphone is the centerpiece of the Internet of Things. And the Internet of Things is connecting electronics together, connecting those devices, sending and receiving information via the Internet. And that's why they're building the car. Okay? It's a very competitive car market in China. They talk about having $18 billion US dollars in cash, and that's how they're going to wave off that competitiveness and become a major car supplier. But also the play here is to become the market leader within China, to become the market leader across the globe in the Internet of Things, the sharing and receiving of data. And what we know is that data is the most important resource in the world. And in order to create this resource or create this intangible asset, you need to create users, you need to create frequency, and from users and frequency, you create assets called data, of which you then sell or use to sell products or services. So car looks good, been excessive demand, but remember, this is part of a longer term play, in my opinion, for them to become the market leader in the Internet of Things and connecting those devices. And they put in a lot of legwork in selling home appliances, the Chinese version of Alexa, washing machines, robot cleaners, vacuum cleaners, ovens, etc., smart fridges that connect to your car, that connect to your phone, and create that network of the Internet of Things. So this is a phenomenal company. I think it's been underpriced for quite a long time, but it's seen a massive move in the last couple of months, off $12, trading, I think, at above $17 when we speak to you today here in Sydney on Friday, the 5th of April. So think past the car and think about what they're doing. This is Chinese innovation at its best. It's upstream, downstream, it's horizontal and vertical integration of its products and its services. So really good move. Let's see how this goes for Xiaomi in the future. All right, so Alibaba continued to announce a share buyback. You can see that in front of you if you're listening to on YouTube, but if you're on the podcast, they announced in early April that during the quarter ending March 31, they repurchased a total of 524 million ordinary shares, equivalent of 65 million ADSs, or a total of $4.8 billion US. These purchases were made in both the US and Hong Kong markets under our share repurchase plan for a fiscal year ending March 31, 2024. Most of the tech giants in China have share buybacks. Most of them. In fact, most mainland giants within China have share buybacks. Tends to be good for a stock price. That's all I'm saying. But they joined Tencent in kind of this buyback bonanza that the guys from Crane Shares titled. I thought it was interesting they continue to buy back their shares, announce it to the market. So they own, and they've been buying back for quite a long time. In fact, for the last year and a half, which most Chinese companies have. And then finally, I just thought I'd mention this one. NetEase dropped 8% in Hong Kong during the week. And that was because of underperformance of their Condor Heroes. So this has been actually a really good performer in spite of, a really bad time in the last year and a half for Chinese tech. The game ranked 21st in China's iOS store for top grossing games, contrary to expectations of a top 5 position. Player criticism focused on the game's combat mechanics and graphic quality. Morgan Stanley, who came out with the kind of downgrade, revised NetEase's game revenue growth expectations to a 10% compound annual growth rate, a CAGR, from an initial estimate of 14%, and that's from Market Screener, the source. Despite the setback, analysts viewed the disappointment as a one-off issue, given the game was not developed by NetEase top studios, but the stock was down 8% off the back of that. I think China's gaming has had a rough run, but this company has done really, really well. And I think it's benefited from the fact that Tencent I'm not going to say forced again, but I will, to kind of diverse and pull back from its gaming dominance within the Chinese market. That's it. We covered kind of 2 weeks in one. We'll be back next week 100%. Please join us. Please subscribe. Please leave us a 5-star review. Please leave us a comment. Reach out to me if you've got any questions. And as always, guys, good luck with your investing.